We are here in 2025, and would you like to know all the different numbers around what I can contribute to my 401k? What can I deduct? How's the tax rates? And would I love to get this into a very organized document? If so, listen to this episode. We're going to tell you exactly how to get it, and we walk you through every number you need to know about.
We hope you've been enjoying all the episodes from Secure Your Retirement. If you'd like to keep learning and receiving these episodes, hit the subscribe button and the bell so you receive alerts when they come out. We've helped thousands of listeners get on the path to securing their retirement. Now it's your turn. Let's dive in.
Welcome, everyone, to Secure Your Retirement Podcast. Cannot believe it. It is here, 2025. This is our first episode of 2025. And we thought, what better way to open up the year than to review all kinds of numbers when it comes to deductibility, taxes, all that good stuff. I will tell you right up front that we have this in a printed document that if you want it, we will be able to get it to you at the end of the episode. I will walk you through exactly how to get this, and it has all the numbers that we're going to walk through, but we're going to walk it through a little bit about things that we want to think about and consider verbally. And then obviously we're going to have our blog written on this, but then you can actually get this document if you would like to get it. So hold on and wait till the end of the episode. I'll tell you exactly how to do it. So let's jump right in, and we're going to talk a little bit about our tax rates for 2025 and how they might have changed just a little bit from 2024.
All right. So, by the way, this document I will say is one of the most important documents that sits on my desk all year. Anytime I get a question on where a tax bracket is or a contribution limit or Medicare IRMAA surcharges, I reference this document regularly because it's a bunch of numbers that we have to know to do proper planning. So I'm going to talk about the tax rates for 2025. The tax rate itself has not changed from 24 to 25. So the lowest bracket is the 10, and then we've got the 12, 22, 24, going all the way up to 37%. Remember, our tax system in the U.S. is a progressive tax. So a lot of times people say, "Oh, I'm in the 22% bracket," which means they assume that they paid 22% on all the dollars of income, and that's just I think a misconception that happens quite a bit. It's graduated, so some of the money gets taxed at 10, then 12, then 22. So understanding brackets, I think, is very good. It's very conducive of making good decisions around tax strategy. The only thing that has changed on the actual tax brackets is the dollar amounts that puts you in those certain tax rates, and they've all gone up. Historically, they go up a little bit based off of inflation. Obviously, we've had some pretty high inflationary years over the last couple of years, so the dollar brackets have gone up a little bit. So, for example, if you are you're in the 10% bracket and this is married filing jointly, just to make it simple. We'll talk about married filing jointly. There is a separate bracket for single, which is referenced on this document, and we'll tell you how to get it. But for married filing jointly, from $0 to $23,850 of income, on that, you're paying 10%. Let's say you make more than $23,850, so you pay 10 on that chunk of money. And then you are in the 12% bracket from 23,851 to 96,950. So I give you that specific number, 96,950, to give you an idea of how much that's changed. In 2024, it was not 96,950 at the top of the 12. It was around 94,000. So it's gone up a couple $1,000s. The 22% bracket, just another example. The top end of the 22% bracket is 206,700 in 2025. In 2024, the top end of the 22% was 201,000. So just to let you know that it has been adjusted for inflation here a little bit. So understanding your rates, I think, is going to help you understand your tax picture and make some good tax decisions this year.
All right. Our next topic here we just thought would be important for us to talk through is long-term capital gains. This is just something to keep in mind if I'm going to sell an asset that I've owned for longer than a year. So long-term capital gain means I've owned this particular thing. That could be property. It could be a stock. It could be a business. Anything that I've owned for more than 1 year, I get long-term capital gain treatment, which means I'm not in those brackets or rates that Merce just talked about. I get a little bit better rate there. So if my taxable income as a married filing jointly is less than 96,700, I actually don't pay anything on long-term capital gains. So if I were strategically thinking, and let's say that I don't know, just retired and I've got an asset that I need to sell and I want to get the best tax treatment, maybe I take all of my income from after-tax dollars and I don't take any from an IRA, and I get my tax rate really low so I could sell that stock or sell that property at the best tax rate. If I make, though, between 96,700 and 600,000 of taxable income, I'm at that 15% bracket. So that remember those numbers that Mersh was just talking about? It's way, way better treatment. Then if I make over 600,000, period, my long-term capital gain is going to be 20. And this is federal taxes. I still could owe some state tax on there. A single person, they can make 48,000 or less, pay zero on their long-term capital gain, and then 48,000 roughly all the way to 533,000 puts them in the 15% tax bracket. So just something to keep in mind. If I'm strategically thinking here at the beginning of the year, I'm going to have an asset that I want to sell, I might want to think about how my income is going to be playing out.
All right, I'm going to touch very briefly on standard deductions. Standard deductions is the immediate deduction that you get off the top of your income, and provided that you're not itemizing. So last year in 2024 for married filing jointly, the standard deduction was $29,200. This year, walking into 2025, our standard deduction for married filing jointly goes up to $30,000, so $800 higher on the deduction. On the single side, we're at 15,000 is our standard deduction for the single. And then there's additional, if you're age 65 or older or blind, there's additional deductions there. For married, it's 1,600. For unmarried or head of household, it's 2,000 as an additional deduction there. I'll touch on Social Security as well. Social Security, the big thing I think people are always curious about is, well, if I'm receiving Social Security benefits, do I get a raise here in 2025? And there is what's called a COLA, a cost of living adjustment, which is if there's inflation, usually we expect a COLA, and we all know we've been through some inflation here over the last couple of years. So effective in January for recipients, there's a 2.5% COLA that will be coming down on Social Security recipients. So 2.5% raise is the way you can look at it. And then you want to touch on full retirement age, because that's also something I think that gets a little confusing in the Social Security space as well.
Yeah, no problem. Did you mention earnings limit, by the way?
I did not.
Okay,
no.
so this will tie this together. So full retirement age, what is that? Well, they have been progressively increasing it. So let me give you a couple of examples. If your birth year was 1958, your full retirement age is 66 and 8 months. If it were 1959, it's 66 and 10 months. And then if you were born in 1960 or above, this is where we've capped out at this point, it's 67. So if you were born in 1960 or later, your full retirement age is 67. So why is that important? Well, if I start taking Social Security prior to that full retirement age, I'm going to get a reduction in what I get from Social Security, but I'm also now going to have a maximum amount of money that I can make as income for that year. Now, this is not passive income like rental income or dividends off of a stock. This is like real, 1099 W-2 type money that I go and work and get it. So we call it earned income. Then I'm going to be capped at $23,400 in the year 2025. Anything I make over that, they're going to keep some of my Social Security, and I won't be able to get it all within that year. So just keep that in mind. Full retirement age, if you were born in 1960 or later, is 67. And then that when we ever talk about full retirement age, that's why that is so important. And then one other thing to keep in mind, all in this Social Security type of topic, is that I am going to be taxed on a portion of my Social Security if I make more than, married filing jointly, $32,000 a year, or if I'm single, $25,000 a year. If I make less than that, I don't pay any taxes on Social Security. If I make more than that, then I've got two tables. The first one, if I make between $32,000 and $44,000, I'm going to have to claim 50% of my Social Security as taxable. And then if I make more than $44,000 married filing jointly, I'm going to have to 85% of my Social Security is taxed. I'm not paying 85% tax. 85% of my Social Security is taxed. If I'm single, That's if I'm making more than 34,000. So for a lot of folks, they're going to be paying taxes on their Social Security because those numbers are so low.
All right, let's talk about something that, again, is can end up being a surprise to someone if we don't do proper planning, which is Medicare. It's this fun term called IRMA. I don't know the exact letters. It's income related, some type of adjustment. And we'll do a specific podcast on this usually throughout the year to help people understand specifically what IRMA is. But I look at it as almost it's a penalty if you make too much money, and they charge you a little bit additional on your Part B and Part D. So walking into 2025 for Medicare IRMA, for your Part B premium with no surcharges is $185 this year for 2025. Where you could start being concerned about, am I going to receive an IRMA surcharge? What they do is, so if we're in 2025, they look back at your income 2 years prior. So they'll be looking at your 2023 income, and then there's brackets around how much income you have, and does that result in a surcharge on your Part B and Part D. So this is a table that's good for understanding, especially if we're running strategies like Roth conversions and all types of different withholding income strategies, distributions, all these things. You want to be very aware of where you're falling in the Medicare IRMA brackets. For married filing jointly, as long as your taxable income is below that 212, this is your modified adjusted gross income is below 212,000, then you are not going to be subject to any type of IRMA surcharges on your Part B and Part D. To give you a reference point, last year in 2024, it was 206,000. If you're below that, then you're not subject to a Part B or Part D type of surcharge. This year, it's gone up by 6,000, so it's 212,000 or less. Again, inflation adjusted, just like our tax brackets are. Here's one example that if you were above the 212, well, what would I expect to pay in IRMA surcharges? If you're between 212 and 266,000 as a married filing jointly on your modified adjusted gross income, your Part B has an additional to the 185, an additional $74 per person per month. And then if you are in Part D, it's an additional $13.70 per person per month. So, that number goes in another bracket up to 185 additional on Part B, 295 additional on Part B. So it can start to add up on us if we're not properly prepared for avoiding or surcharges, or in some cases being aware of them and still deciding to take them because it helps with a different strategy that we're running. So if you're running some types of tax strategies this year and you're not talking about it, or your professional that you're working with is not paying attention to where your brackets fall, you definitely want to be aware of that as we're making decisions in 2025.
Okay, if you are still working and you participate in a 401k, you want to make sure here at the beginning of the year, if you want to max fund your 401k, that you know what those numbers are, so that you can talk to your HR department and say, adjust my contributions. Here's the max limit that you can put in if you're 50 under age 50. It's $23,500 a year that you can put into your 401k. And it doesn't matter whether you're putting that in the Roth or the traditional side, that's the limit. Now, your company could match you up and above that, but $23,500 is your max. Now, there's a provision that if you're age 50 and over, you can do a catch-up, and that catch-up is $7,500. So that's in addition to the $23,500. And then what we've got this little period between ages 60 and 63 that somebody can do an ultra catch-up. And that number this year is $11,250. Now, that is not in addition to the $7,500, but it just raises your catch-up from the $7,500 to $11,250.
All right, let's talk about so that was 401k, 403b, 457, employer plan type of contribution limits. We also have just the simple traditional IRAs and the Roth IRAs. Those are subject to limitations as well. For 2025 on the IRA, either traditional or Roth, we can put in up to 7,000 for the year. If we are above the age of 50, then we can do an additional $1,000. So if you're above the age of 50 and you want to make, and you're eligible for a Roth contribution, You can do up to 8,000, and if you're eligible for a traditional, you can do up to 8,000. Maybe get some tax benefit from it as well, which leads into tax deductibility on the traditional IRA. Work with your tax professional on this to help understand: am I getting a deduction if I put money into my traditional IRA? There are phase outs, there are brackets, just like there are other brackets in our tax system. So you want to make sure that we're understanding those and actually getting the true tax benefit out of contributing to these plans. What else we got, Raiden?
Yep. So basically just a couple little mentions and then we're done with this. One, required minimum distributions. Pretty much if you're turning 73, you're going to have required minimum distributions. If you're over 73, you've already been taking required minimum distributions. And so you want to make sure you talk to your advisor and say, do I have them? How much am I going to take? And we're talking about money that needs to be taken out of a traditional 401k or IRA. And that is all called required minimum distributions. A couple final topics. If you've ever wondered, well, wait a minute, should I be doing any kind of special things with my estate plan so that my kids don't have estate taxes? Well, they're now the lifetime exemption is $13,990,000. That is per person. So we have a lot of room there right now not to have to worry about estate tax if you are under that. And then the final thing is, if you are taking advantage of a health savings account, an individual for starting this year can put in $4,300 into their HSA. If you're a family with an HSA, you can put in $8,550. And then if you're over 55, you can put an additional $1,000 in there. So these are just a bunch of numbers. We know that it's a lot, but if you'd like to get it all, have it right in front of you, you can reach out to us. Easiest way to do it is to email us at info@pomwealth.net, and we will email you right back with this breakdown that you can have right in front of you. Makes it super easy, super simple. Or you could call the office and you could ask for it, and we're happy to provide that as well. If you would like to have a conversation with us, you can go to the top right-hand corner of the website, which is pomwealth.net. Click on schedule call. Our calendar comes right up, and we would love to be able to answer any questions that you might have. We hope this has been helpful. Thank you very much for listening. We'll talk to you again next Monday. We hope you have enjoyed this episode of Secure Your Retirement. If you would like to learn more, we have actually created an online course called 3 Keys to Secure Your Retirement. This video course helps you to think through all the different steps as you get ready to plan for and live throughout retirement. You can access this by going to our website, pomwealth.net. In addition, you can also subscribe below to our podcast called Secure Your Retirement.
For more retirement tips, check out these videos. Also, if you find them valuable, please subscribe to our YouTube channel and give us a like.